Good afternoon. I hope I am audible to the last section in this hall. It's indeed overwhelming to see such a large gathering here of serious players in our financial sector and in particular the fintech sector. I think each one of you who's present in this hall is contributing to the nation's progress, is also contributing to the global developments in financial services sector as well as in the fintech ecosystem at a global level, irrespective of which country you come from. And I'm told by the organizers that by the third day, the expected footfalls through registrations is going to touch 80,000. So a big round of congratulations and appreciations to the team, already to the organizing team, and I'm told already 50,000 is the footfall which has been recorded so far. So with that, let me begin my address. Shri Chris Gopal Krishnan, members of the organizing team, dignitaries present in the audience, CEOs of banks, NBFCs and fintech companies and their other executives, members of media, ladies and gentlemen. I am very happy to participate in the 5th edition of the Global Fintech Festival, GFF. I would like to congratulate the organizers, the NPCI, the PCI and the FCC for bringing together diverse stakeholders from the fintech ecosystem, including fintech innovators and companies, banks, NBFCs, regulators, and others for this year's GFF. This event has grown into a much-awaited fixture in the calendar of not just the fintech industry, but also of the broader technology ecosystem. The GFF indeed represents a true melting pot of ideas where innovative concepts and diverse perspectives come together with potential to shape the digital future of our country and especially the financial sector. It also provides a unique opportunity to align our goals and strategies to ensure that the fintech ecosystem continues to grow dynamically and sustainably. India is now a fast-growing economic powerhouse with an increasingly tech-savvy population. India's financial sector has witnessed a remarkable transformation driven, among other factors, by the fintech sector. Publicly available information places the number of fintech founded in India at approximately 11,000. The sector has received investments of about $6 billion in the last 2 years alone. In my address today, I propose to highlight 3 major aspects. First, setting the priorities for India at 100. Second, technologies for the future. And third, the regulatory architecture for fintechs. I would like to begin by the first part of the first theme which I wish to highlight, that is setting the priorities for India at 100. As you know, India will reach 100 years of its independence in 2047, and that's what I mean when I say India at 100. I would like to begin by quoting Mahatma Gandhi, who had said, "The future depends on what we do in the present." Therefore, as we proceed in our journey towards the centenary of India's independence in 2047, it would be essential to reflect and imagine the future of our financial landscape, its requirements, and the technologies that will shape it. This journey will be marked by dynamic shifts in technology, regulation, geopolitics, and growing societal expectations. The financial sector is experiencing rapid digitalization and innovation. While all of us strive to enhance financial inclusion, optimize digital payments and harness emerging technologies like blockchain and artificial intelligence, we also confront the inherent unpredictability and interconnectedness of the global financial system. In this environment, developing a mindset that anticipates disruption and embraces change with prudence becomes very, very important. Financial institutions and fintech startups alike must therefore adapt swiftly, leveraging agile strategies and robust frameworks to capitalize the new opportunities while mitigating the connected risks. It's up to the stakeholders in the Indian financial ecosystem, banks, non-banks, fintechs, regulators, and the government to foster innovation with resilience. While the fintech ecosystem is ushering in much needed personalization and contextualization of finance for consumers, the context needs to be broadened to build a financial system that serves the broader society. To achieve these, I wish to propose the following 5 policy priorities for the future of India's financial system. The first policy priority would be digital financial inclusion. As a policy priority, financial inclusion should ensure that everyone has appropriate access to financial services. The Reserve Bank's Financial Inclusion Index, which we launched in 2021 and which measured 53.9 in March 2021, has gone up to 64.2 in March 2024. So from 53.9 in 2021 March, it has gone up to 64.2 to this year's, that is March 2024. As a country, we have succeeded in ensuring banking access to every village within a 5-kilometer radius or a hamlet of 500 households in hilly areas. So far, 530 million Jan Dhan accounts have been opened under a national mission. And incidentally, as I'm speaking to you, the Jan Dhan scheme of the government has completed 10 years since its establishment, and its progress is there before all of us to see. Initially, the apprehension was that all these accounts will be zero balance accounts and there will be no activity, there will be no sort of transactions taking place through such financial accounts. But I think the experience over the last 10 years has completely belied such apprehensions, and today there are 530 million Jan Dhan accounts, most of it, in the name of women, and many of it in the name of women, and the total savings bank savings in these accounts, I don't recollect the number, but it is a huge amount. And I have to also mention that of the Jan Dhan accounts, 66% of the accounts have been opened in rural and semi-urban areas, and 55% with women beneficiaries. While significant strides have been made in expanding financial inclusion, the evolving landscape demands a shift towards digital financial inclusion. That is, promoting secure and digitally enabled financial services and products for the financially excluded and underserved population. Digital financial inclusion has the unique advantages of scalability and cost effectiveness. Accordingly, the next 2 decades will predominantly be about leveraging technology to deliver accessible and tailored financial services that meet diverse needs. In the pursuit of digital financial inclusion, fintechs may strive to offer innovative and accessible financial services, bridging gaps in traditional banking with digital payment solutions, microloans, and affordable insurance. They can enable seamless access to financial services in remote areas through mobile banking apps, digital wallets, and online lending platforms with superior and safe customer experience. The use of data analytics and AI could further enable personalized and efficient financial solutions. I would now like to highlight and speak on priority 2. I said that there are 5 priorities I would like to highlight. Priority 1 was digital financial inclusion. Priority 2 is digital public infrastructure or DPI. The second key policy priority would be to further deepen digital public infrastructure. DPI, which encompasses frameworks like digital identity, that is Aadhaar, universal fast retail payments, that is UPI, and targeted payment solutions like platform for bill payments will enhance the efficacy of the financial system in general. They would be key tools to promote interoperability, transparency, and cost effectiveness. New DPIs could address emerging challenges such as frauds, cyber threats, data privacy, and other concerns. They could also support the integration of advanced technologies like blockchain and AI to enhance security and efficiency in financial services. Continuous innovation is crucial in harnessing technological advancements and maintaining a competitive edge in the global financial landscape. One significant initiative in this direction is the Reserve Bank's pilot on Unified Lending Interface, that is ULI, earlier known as the Public Tech Platform for Frictionless Credit. ULI aims to enable lending institutions to offer frictionless end-to-end digital credit by leveraging consent-based data and related services. There are about 50 such types of data services on the ULI platform. Apart from banks and NBFCs, we are now focusing on inclusion of other lenders like cooperative credit institutions through the NABARD. A full-scale launch of the ULI will be done in due course. As I said 2 days ago in another event in Bangalore, the new trinity of JAM, UPI, ULI will mark a revolutionary step forward in India's digital public infrastructure journey. Priority 3 that I wish to highlight is consumer protection and cyber security. Ensuring robust consumer protection is crucial for upholding trust in the financial system. As consumers are increasingly relying on digital financial services, their expectations for personalized, efficient, and seamless experience are also growing. Alongside traditional risks such as mis-selling and fraud, new manifestations of consumer risks such as data privacy and security breaches have emerged with the advent of new technologies. Leveraging technology for real-time monitoring and ensuring regulatory compliance will be essential to address these challenges effectively. The Digital Personal Data Protection Act 2023, that is DPDP Act 2023, is a cornerstone in India's consumer protection landscape. It marks a significant shift towards safeguarding personal data. This act enshrines the principles of data minimization and purpose limitation to ensure that organizations collect only necessary information and use it solely for specified purposes for the required period of time. It empowers individuals with the right to access, correct, and erase their data, thus giving consumers greater control over their personal information. This act incentivizes businesses to adopt robust data protection measures, which will ultimately enhance trust in the digital transactions. Dark patterns such as misleading buttons, hidden charges, and forced continuity have become big concerns in the digital marketplace. The Guidelines for Prevention and Regulation of Dark Patterns 2023, issued by Government of India, is an important step to protect consumers from unfair application of technology in businesses. These guidelines aim to identify, prohibit, and penalize restrictive and misleading practices so that consumers can make informed choices. On their part, banks and fintech NBFCs are expected to adopt a customer-centric approach, implement robust security measures, offer transparent financial products, and adopt fair lending practices. Algorithmic decisions need to be fair and unbiased and treat customers equitably. Minimizing technology risks requires investing in resilient IT infrastructure and continuous monitoring to protect against cyber threats and technical failures. By embracing these principles, businesses can enhance consumer trust, foster long-term relationships, contribute to a more secure and reliable financial ecosystem, and ensure their own long-term viability. Beyond these steps, cybersecurity emerges as a critical pillar in safeguarding India's digital financial ecosystem from a systemic stability perspective. As financial transactions increasingly migrate online, the threat landscape is expanding exponentially. Investing in state-of-the-art technologies such as AI-driven threat detection, analysis, and mitigation, along with clear focus on improving human resource capabilities, are indeed necessary to bolster resilience of our information systems. Promoting cybersecurity awareness among consumers and employees alike are essential steps towards building a secure digital economy. As a regulator, I have to emphasize these aspects on behalf of the Reserve Bank, while at the same time reiterating our continued commitment to promote innovation. Priority 4 is sustainable finance. Long-term economic stability needs prioritization of sustainable finance, sustainable growth, and environmental preservation. India's commitment to environmental preservation is enshrined in Article 48A of the Constitution of India. From a financial sector perspective, we meaning the Reserve Bank, we have taken steps for ensuring sustainability with recent initiatives like Sovereign Green Bonds Framework of India in 2022 and the Framework for Acceptance of Green Deposits in 2023. These frameworks are expected to play an important role in financing green projects, incentivizing sustainable practices, and lowering societal costs of development. Despite their benefits, green bond and green deposit frameworks nonetheless face several challenges. They include scalability, as the market for green bonds needs to expand significantly to attract larger issuances and diverse set of investors. Ensuring authenticity and impact of green projects financed through these frameworks requires robust monitoring and reporting mechanisms. Technology can play a pivotal role in overcoming these challenges. Blockchain technology, for instance, can enhance transparency and traceability in green bond issuances and provide immutable records of project impacts. Artificial intelligence and big data analytics could enable banks and investors to assess environmental risks and opportunities associated with their green investments. Fintech innovations such as digital platforms for trading green bonds and impact measurement tools can streamline processes and attract a broader investor base. Looking ahead over the next 2 decades, fintechs will be instrumental in driving the progress in transition finance, climate finance, and nature-based solutions. Strengthening regulatory frameworks, enhancing investor awareness, and fostering public-private partnerships will be very critical. By harnessing the transformative power of technology and promoting innovation in sustainable finance, India can accelerate its transition towards a resilient and low-carbon economy. We have to put our heads together to achieve sustainable growth and environmental stewardship for the future generations. I would now like to focus on priority number 5, that is global integration and cooperation. India has engaged actively in international fora and bilateral agreements to foster economic cooperation with many countries. Going forward, strengthening financial infrastructure, including cross-border payment systems, will be our key focus areas. India, with its tech talent and evolved financial fintech ecosystem, holds the potential to serve as a global hub for digital innovation and fintech startups. Building and strengthening strategic partnerships, reinforcing our commitment to international cooperation, developing institutions of excellence in the areas of technology and innovation across a wide spectrum of areas, including financial services, would give the right impetus for our journey towards 2047. Based on encouraging response we have received from several jurisdictions, we are now focusing on making the UPI and the RuPay truly global. The deployment of UPI-like infrastructure in foreign jurisdictions, facilitating QR code-based payment acceptance through UPI apps at international merchant locations, and interlinking UPI with fast payment systems in other countries for cross-border remittances are on top of our agenda. Notable progress in this direction has already been made with countries like Bhutan, Nepal, Sri Lanka, Singapore, the UAE, Mauritius, Namibia, Peru, France, and a few other countries. These endeavors underscore collaborative efforts for adoption of India's initiatives across the globe. I would like to compliment NPCI and my colleagues in the Reserve Bank for what has been achieved so far. But we must resolve to do more in this national endeavor. And that's a message. We have done a lot, but we have to do more. India's CBDC, which is in pilot stage, is another example of possible international cooperation. We are now utilizing features like programmability to provide credit or government assistance to landless tenant farmers and carbon credits to farmers through CBDC. While we have successfully demonstrated the interoperability of CBDC with retail fast payment systems like the UPI, we continue to gain from our experimentation on offline solutions. As we make progress, we would be happy to cooperate with other nations in their CBDC efforts. So that was the first part of what I said, priorities for India at 100. The second part which I would like to focus is technologies for the future. Now, looking towards the future of India's financial landscape, the integration of cutting-edge technologies promises transformative advantages across various facets of our life. Artificial intelligence and machine learning are poised to revolutionize financial services in unprecedented ways. AI algorithms are already being deployed for fraud detection. Machine learning models are increasingly being employed in credit scoring, leveraging predictive analytics to assess creditworthiness and expand access to credit. AI-driven chatbots and virtual assistants are steadily enhancing customer service experience by providing personalized recommendations, resolving queries promptly, and improving overall satisfaction. As AI and ML capabilities continue to evolve, their potential applications in regulatory compliance, investment advisory services, and algorithmic trading are expected to further redefine the financial landscape. Simultaneously, we should also fully understand the risks posed by AI and facilitate calibrated and responsible adoption. Players in the financial sector, central banks and governments should facilitate development of trustworthy AI, keeping in mind the concerns surrounding data privacy, explainability, accountability, and transparency. What can be a desirable model for governing technologies by AI may perhaps be a key issue for discussion among the experts assembled here and in the next 2 days. Now, the Internet of Things represents, that is IoT, represents another frontier of opportunity for the financial sector. IoT devices embedded with sensors and connectivity capabilities are reshaping the payments ecosystem by enabling seamless transactions through connected devices such as wearables and smart appliances. Further, IoT-driven data analytics offer insurers real-time insights into policyholders' behavior and risk profiles. They can facilitate personalized insurance offerings and dynamic pricing models. IoT-enabled devices in supply chain finance and asset tracking have the capacity to streamline operations, enhance transparency, and mitigate risks. As IoT adoption grows, collaboration between fintech innovators and IoT developers will be crucial to harnessing its full potential. Now let me turn to quantum computing. Quantum computing holds great promise as a game-changing technology with profound implications for cryptography, financial modeling, and risk management. Its potential to perform complex calculations at great speed and scale poses both opportunities and challenges. In cryptography, quantum-resistant algorithms are being developed to safeguard sensitive financial data from quantum-enabled cyber threats. In financial modeling, quantum computing's ability to process vast amounts of data and simulate complex scenarios promises to revolutionize portfolio optimization, trading strategies, and risk assessment. Moreover, quantum computing's potential to solve optimization problems could enhance real-time decision-making processes and improve predictive analytics in risk management. As these future technologies continue to evolve, their integration into India's financial ecosystem will require strategic investments in research and development, collaboration across sectors, and proactive regulatory frameworks to ensure ethical deployment and mitigation of potential risks. The Reserve Bank is fully conscious of all these issues, and we are giving due attention to these areas. Finally, the third part of and the last part of what I wanted to say focuses on regulatory architecture. Finally, as I said, I will like to touch upon regulatory approach for the fintech sector. Sustainable and orderly development of fintech sector requires an appropriate balance between innovation and prudence. Our endeavor is to carefully craft regulations to achieve this delicate balance while simultaneously ensuring trust, security, accessibility, risk management, and competition. In this context, I would like to mention that several regulatory guidelines have been issued in the recent past by the Reserve Bank after wide-ranging consultations with stakeholders. These include the issuance of the guidelines on digital lending in September 2022, master directions on outsourcing of information technology services in April 2023, and master directions on cyber resilience and digital payment security controls for non-bank payment system operators in July 2024. A preferred approach, this may be of interest to all of you, a preferred approach for achieving balance between innovation and prudent regulation involves self-regulation within the fintech sector. Self-regulatory organizations, that is SROs, comprising industry participants and having a good understanding of the sector's unique challenges and opportunities would be in a position to give appropriate suggestions to regulators on issues of regulation that are both practical, that is the suggestions should be that can be practical and effective. So these SROs, when constituted, they are uniquely placed as an interface between the regulator and the fintech sector, because these SROs would understand the requirements and the evolving technologies. They are closer to the ground, and they can sort of consolidate, synthesize, analyze, and give practical, effective, and stable, and what we can say prudent recommendations to the Reserve Bank, which we are always willing to discuss and always willing to engage with all of you. Now, the announcement of a framework for recognition of self-regulatory organizations for fintech by the Reserve Bank, which we did last year in 2023, marks a pivotal step forward in this direction. I think we issued the framework sometime earlier this year in 2024. So this is actually a pivotal step forward in the direction of positioning SROs. It may be recalled that in last year's GFF, in this event, I had announced our desire, that is Reserve Bank's desire, to see at least one fintech sector SRO, self-regulatory organization, taking shape by GFF 2024, that is taking shape by this year's event. I am happy to announce that of the 3 industry bodies, entities who have applied for recognition as SRO, the Reserve Bank has granted recognition to one applicant, that is to one entity. Of the remaining 2 applications, one application has been returned with a provision for resubmission after meeting certain requirements. The 3rd application is under examination. Through regular consultations, feedback mechanisms, and policy dialogues, the SROs would facilitate open communication and enable fintechs to stay informed about regulatory expectations and priorities. Just to illustrate the depth of our engagement with the fintechs over the past 1 year, I would like to mention that officials and teams from various departments of the Reserve Bank have engaged in about 750 interactions bilaterally and held about 50 structured meetings with fintech players over the last 1 year. I reiterate our commitment to fostering a dynamic fintech sector. Let me now try and conclude. The journey towards India at 100 is filled with immense potential and opportunities. The transformative power of fintech innovations, coupled with our commitment to financial inclusion, sustainability, and consumer protection, sets a robust foundation for the future. The seamless integration of emerging technologies will further redefine the financial landscape. Let us embrace this dynamic era with a collective vision and collaborative spirit to ensure that India's financial ecosystem not only meets the aspirations of our people, but also sets a global benchmark for innovation and growth. Thank you very much for your patient hearing. Namaskar.